and you're doing some example trades. I mean, he even talked about NVIDIA doubling in the future at some point. It's at 156 today. How would you go about an example trade?
Well, on NVIDIA, Nicole, I mean, I'm going to play the breakout continuation. It recently broke above the 153 area as a stock. This is an area that corresponds to levels the stock had published back in early July. There's a little bit of weakness today. We could certainly see some weakness in the short term continue amongst the semiconductor names because they've had such a tremendous run up. But nonetheless, I think that potentially that 153 area may hold for NVIDIA. So what I'm going to do is I'm going to structure a bull call spread for NVIDIA, and going out to August, expiration, third week of August, I'm going to basically buy the 155 call, and then I'm going to sell the 165 call against it. So it's a $10 wide bull call spread here. Altogether, just a few minutes ago, you could have bought it for about $4.50 a share or $450 a contract. So in essence, it's bullish trade. So we do need to see the stock move to the upside. 159.50 is break even by expiration, which is again the third week of August. And then max profit on this trade is 550. So it's nearly a 1-to-1 ratio, return on risk. And that max profit will be achieved if the stock does hit 165 or higher. So it's a bullish continuation trade based on the breakout, which happened last week, and it does correspond to levels that it broke out of, and they go all the way back to the beginning of the year.
It's evident that artificial intelligence, AI, is still a major market theme as 2025 approaches its midway point. Some investors might be growing weary of the AI-related hoopla, as this hasn't altered since the beginning of 2023. But in actuality, there has never been a more significant theme related to investments. For 2025, the majority of AI hyperscalers anticipate making record-breaking capital expenditures, mostly to increase their cloud computing capacity for AI applications. NVIDIA will benefit more than any other firm from it. For many years, NVIDIA has been the best AI stock buy, and it's still a good one going forward. However, is it the top AI stock to purchase in July? Graphic processing units, GPUs, are chips made by NVIDIA that were initially intended to enable computers to produce high-quality visuals for video games. The fact that these chips are parallel processors, especially designed to handle computations that can be readily divided into numerous little tasks that can be completed concurrently, allows them to accomplish that so well. AI model training and operation are examples of high-performance workloads that meet that specific need. In the data center GPU industry, NVIDIA has rivals, but none of them can match its technology and related products. Given the significant amount of money spent on data centers, the majority of estimates place its market dominance in that area at almost 90%, which is astounding. Over the coming years, data center spending is also expected to soar. NVIDIA CEO Jensen Huang mentioned a third-party estimate that data center capital expenditures in 2024 came to $400 billion during his keynote address at the company's 2025 GTC developer event. It's evident that a sizable portion of that funding went to NVIDIA, given that the company made $115 billion in data center sales during its fiscal 2025, which included the majority of 2024. By 2028, data center capital expenditures are expected to reach $1 trillion, according to the same estimate. NVIDIA's income would more than treble at that time if it could continue to bear its portion of those expenses. That makes a strong case for NVIDIA stock, and the chipmaker's growth should still be noteworthy even if actual spending falls short of $1 trillion. The thesis behind NVIDIA's stock remains intact because AI compute capacity is still far from being completely developed to the extent that the tech industry anticipates needing it. However, is the stock priced appropriately for new investors to profit from future growth? There is a widespread belief that NVIDIA's stock has grown incredibly costly, but investors should stop thinking about that. This is no longer the case, though it might have been in the early stages of the AI arms race. It currently trades at 36 times forward earnings, which is about where some of its larger tech competitors are trading. However, NVIDIA is expanding more quickly than they are. Amazon is valued at 34 times forward earnings, whereas Microsoft is valued at 37 times. However, Microsoft's revenue increased at a rate of 13% during the most recent quarters that were published, while Amazon's revenue increased at a rate of 9%. While I don't intend to suggest that NVIDIA is inexpensive, its value is comparable to that of its larger tech competitors. Years from now, the price will be negligible if its data center GPU sales increase at the anticipated rates. I am therefore comfortable stating that NVIDIA is the top AI stock to purchase in July. With a market valuation of $385 trillion, NVIDIA has regained its position as the most valuable business in the world, with shares up more than 80% from their April lows. The AI chipmaker has reported advances for 6 days in a row, surpassing $158 to hit a new record high. Considering that NVIDIA is effectively locked out of China's $50 billion semiconductor industry, the stock's tenacity is astounding. President Donald Trump's new regulations have prevented NVIDIA from selling its H20 chips, causing the business to write down $4.5 billion in inventory and lose out on $8 billion in possible sales. CEO Jensen Huang admitted that American industry is essentially shut out of the Chinese market. NVIDIA's hegemony in AI infrastructure, however, is still uncontested. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. In May, the company's sales increased 69% year over year, mostly due to a 73% increase in its data center business. For fiscal 2026, analysts predict a 53% increase in revenue to around $200 billion. Dan Ives of Wedbush projects that NVIDIA will surpass $4 trillion this summer and reach $5 trillion in 18 months. With NVIDIA technology enabling billions of robots, Huang emphasized robotics as the next big potential beyond AI. NVIDIA's technological moat and growing addressable markets indicate the rally has fundamental support at current levels, notwithstanding the persistence of geopolitical worries. As nations around the world scramble to develop their own AI capabilities, NVIDIA is taking advantage of a growing wave of sovereign AI expenditures, indicating a new stage of expansion beyond typical hyperscaler clients. With executives pointing to tens of billions of dollars in immediate prospects that might reach $1 trillion over several years, the chip giant is facing unprecedented demand from governments and regional cloud providers looking to establish AI sovereignty. Compared to the concentrated AI infrastructure buildouts of the previous 2 years, this signifies a significant change. In order to preserve sovereignty over national data and create models trained on native languages and cultural contexts, nations in Asia, the Middle East, and Europe are giving local AI infrastructure top priority. After making promises in the Middle East, NVIDIA recently announced collaborations in the UK, Germany, and France. The needs for AI computing have changed significantly with the advent of reasoning models like DeepSeek. As these models think through problems during inference, they produce more tokens, increasing the market potential for GPU computation by up to 20 times. NVIDIA's most recent Blackwell architecture, which was designed especially for inference workloads, benefits from this change. As AI workloads get more complicated, NVIDIA's integrated strategy, which combines GPUs, networking, and software, continues to set the chip firm apart. NVIDIA is now positioned for higher value sales because to new supply chain dynamics brought about by the shift from single server installations to complete rack-scale systems. With about 100 AI factories being built worldwide, NVIDIA is establishing itself as the preferred platform for inference and training. With its Spectrum X Ethernet solution gaining popularity alongside more conventional InfiniBand products, its networking business just reached $5 billion. In contrast to specialized ASIC solutions tailored for certain use cases, NVIDIA's capacity to serve a variety of workloads throughout its ecosystem seems to be becoming more and more useful as the AI market develops. In the past 12 months, NVIDIA's stock has returned 28% to owners, and over the past 10 years, it has increased by an astounding 31,000%. Of the 44 analysts who follow NVIDIA stock, 37 suggest a strong buy, 3 suggest a moderate buy, 3 suggest a hold, and 1 suggests a strong sell. Just around $100 is the 12-month average target price for NVIDIA stock, which is 12% higher than the present price. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
With the AI spend prospects for companies, will they be spending more and more and more?
Yes, absolutely. Yeah, we're seeing use cases expand rapidly amongst enterprises and also new venture capital backed businesses that are creating wonderful new software tools that businesses are gobbling up each and every day.
And what does AMD have that may be different?
Just to put this in perspective, NVIDIA's data center semiconductor business is about $160 billion at today's run rate per year. AMD, meanwhile, is in the neighborhood of 10 or 12 billion. So NVIDIA has a gigantic lead, and they're spending quite a bit more on R&D to sustain that lead. AMD is trying to catch up as quickly as they can. I think that they are making some, signs of progress. Their customer base seems to be expanding a little bit beyond, mostly just Microsoft to Meta and a couple others. So that's good news. But yeah, they're fighting an uphill battle in a very fast-growing market. So will they grow? Yes. Will they catch up to NVIDIA? No, I don't think that's a realistic expectation.
It's amazing how easily we put AMD and NVIDIA in the same sentence, and how, NVIDIA is number one and AMD is number two, but AMD is so far behind NVIDIA. I don't think I realized just quite when you talk about the data center numbers here with the 165 billion versus 10 billion. That's a big difference.
Yeah, and I think another area where you see that, the implication of that is R&D spending. So NVIDIA is spending about $15 billion of annual research and development, to advance their products as quickly as they can. That's about 10% of that data center revenue number I gave you earlier. Meanwhile, AMD's spending, 6 or 7 billion a year, so less than half, but that's 25% of their sales. So they're having to spend with great aggression to try to catch up and keep up, but it's an uphill battle.